Silver's spike this afternoon is being pinned on a perfect storm of safe haven flows, Fed cut expectations, physical tightness, and momentum trading, with some big houses now openly talking about $100 within a 0 to 3 month window rather than years. Silver is trading around the low $90s per ounce today, up roughly 4 to 6% on the day, and nearly 40 to 50% over the past month, which is classic blow-off type price action. Commentators are pointing to a cluster of macro drivers: heightened geopolitical tensions, renewed questions around Fed independence, and expectations of rate cuts in March, all of which are pushing flows into safe haven metals. On the structural side, the narrative is real deficits plus FOMO, persistent physical market tightness in silver, especially with strong industrial demand from solar, EVs, and broader energy transition uses, layered on top of aggressive ETF and speculative buying. Citi's latest metals note and related coverage have explicitly lifted their 0 to 3 month target for silver to about $100 per ounce, alongside a $5,000 target for gold, citing, quote, heightened geopolitical risks, ongoing physical market shortages, and renewed uncertainty on Fed independence. The way they present it, $100 is roughly a mid-teens percentage move from current levels, silver already up approximately 60% over 3 months. So they're not calling for an entirely new regime so much as an extension of the current parabolic leg, with the explicit caveat that volatility and the risk of a sharp correction afterward are high. Bullish camp. Analysts who focus on structural deficits argue the rally can stay intact, at least through 2026, with further upside as industrial demand outpaces mine supply and as metals reprice against a weaker dollar and geopolitical risk. Cautious camp. Even some bulls warn that after a blow-off to levels like $100, silver and gold could be vulnerable to mean reversion once Fed policy or geopolitical risk looks less extreme, so traders should expect violent swings and not a smooth grind higher. At the current trajectory, a print near $100 is absolutely in play in the coming weeks, but the consensus tone is fast, volatile, and fragile, not a straight line that makes $100 by tomorrow a reasonable base case.